Hi, welcome to Wealth by Lisa channel. Today's topic is most asked ETF questions. ETFs are a popular choice for passive investing because they provide broad market exposure and are easy to manage. How do ETFs work? ETFs pool money from investors to buy a diversified range of assets. You can buy shares of the ETF on a stock exchange, which gives you exposure to all the assets within it. What's the difference between ETFs and mutual funds? ETFs trade like stocks during market hours, while mutual funds are only bought and sold at the end of the trading day. ETFs usually have lower fees. Are ETFs risky? ETFs are generally less risky than individual stocks because they hold multiple assets, but the risk depends on what the ETF is investing in, like stocks, bonds, or commodities. Can you lose money in an ETF? Yes, like any investment, the value of an ETF can go down, especially if it tracks a market that performs poorly. How do ETFs make money? You can make money from an ETF through price appreciation, which means the ETF's value goes up, and dividends, if the ETF holds dividend-paying stocks. Do ETFs pay dividends? Some ETFs do, especially those that hold dividend-paying stocks or bonds. You can choose ETFs based on whether you want income from dividends. How do I invest in ETFs? You can invest in ETFs through a brokerage account by buying shares of the ETF, just like you would with individual stocks. I personally have been using Questrade for years as it offers free ETF purchases, commission-free trading for Canadian and US stocks, and no annual account fees. Use my code below to get 50 when you open a new account. What types of ETFs are there? There are various types of ETFs, including stock ETFs, track stocks or specific sectors. Bond ETFs track bonds. Commodity ETFs track commodities like gold or oil. Sector ETFs focus on specific industries. Thematic ETFs focus on specific trends, industries, or investment themes rather than broad markets. They target areas expected to grow due to technological, social, or economic changes. What is the difference between an index ETF and an actively managed ETF? Index ETFs track a specific market index like the S&P 500 passively, while actively managed ETFs have fund managers selecting and managing the assets. What are the tax implications of ETFs? ETFs generally have favorable tax treatment compared to mutual funds. However, you may still pay taxes on dividends or capital gains when you sell the ETF. How do I choose an ETF? Look for factors like expense ratio, performance, diversification, and whether it fits your investment goals and risk tolerance. Can I sell an ETF anytime? Yes, since ETFs trade on stock exchanges, you can sell them anytime the market is open, just like stocks. Are ETFs better than stocks? ETFs can be less risky because of their diversification, but they may offer lower potential rewards than investing in individual stocks. It depends on your investment goals, risk tolerance, and strategy. Which is better for you? Choose ETFs if you want diversification, lower risk, and a hands-off approach. Choose stocks if you're willing to research, take on more risk, and aim for higher returns. Many investors use both, ETFs for stability and stocks for growth potential. Don't forget to subscribe to my channel and like this video for more content. This is not financial advice. Thank you for watching.